Well, BK, always good to see you.
Hey, Melissa, good to be here.
Two tenets of the bull case: store value and it's a means of transaction. Those two things didn't really come true in 2018. So what is the thesis, the bull case right now?
Well, I actually think for me, the bull case and the investment case is that everything that you can say is wrong with Bitcoin is going to get fixed. Similar to with the internet when it was super slow and you had dial-up internet and people didn't want to shop online and all of those things. As the technology progressed, it got better and it got a higher adoption rate. So the bull case is it's got to get better, and you got to have an adoption rate we're roughly, I think CNBC.com had a great article, said about 8% of Americans have invested in Bitcoin. Roughly 10% is that threshold rate where you get adoption. So we're just punching up against that.
Okay, well, the internet didn't change or turn on a dime or go higher in a year. So what sort of time frame are we looking at? And talk to me about how you have been trading Bitcoin, because I know you get a lot of hate Twitter. We all do.
No.
Anybody who tweets about Bitcoin, right, gets the hate Twitter. But you, I'm sure, have gotten a lot of it because people think that you're advocating Bitcoin and holding on straight through, and that hasn't been the case.
No, that hasn't been the case. First of all, I started talking about Bitcoin in 2013 when it was as low as $250. But second of all, I've always said 1 to 5% of your portfolio should be allocated to this because this is the riskiest thing you can do with your money. That being said, at my firm, we run a long-short crypto hedge fund. We have systematic models that are both long and short on a long and short-term basis. So at any given time, we can be short Bitcoin. Doesn't mean we don't like it anymore, but these are markets, and we need to trade the markets that we have.
So how many times, I don't know if you can quantify this, but I mean, as a percentage of time this year, how often have you been short versus long Bitcoin, and what's your directional stance right now?
So directionally right now, we're about neutral. I probably have a net short position on at this point in time, but I think we're getting closer to the bottom. We have the preconditions for the bottom, kind of the mania that we had last year. You're seeing that reflected here in a pessimism. So the preconditions are there. Wouldn't surprise me if we pop down to 2,900 on Bitcoin before we bottom. That's kind of what I'm looking at as the next level.
An 80% decline, does that help or hurt the convincing of institutional investors to get into this space?
You know, it's interesting. I would have thought it hurt it, but I can just tell you from the phone calls that we're having, institutions are looking at this as, okay, this has gone through a bear market, it didn't go away, and so we need to get some exposure to it. And if you look back at the history of Bitcoin, it's done this about 3 times since inception, 2010 to 2012, 2014 to 2016, and now let's call it 2017 through 2018. It is subject to these boom-bust cycles.
I have just one question, Brian. What is the break-even for mining Bitcoin right now? How are we below that?
So it depends, right? So 5,900 was the high break-even, and that's why when you saw Bitcoin break below 6,000, you saw a cascade of selling, a lot of miners selling out. It appears now with the miners that are left, around 3,000 is your break even, and that's really dependent on what your electricity costs are. So if you're up in Canada and you're getting 2 cents a megawatt hour, or you're paying 2 cents a megawatt hour, you might be okay at these levels.